Hey guys, Dave Keller here with StockCharts.com. Thanks so much for joining me on this special edition of The Final Bar. This week, we're looking at 5 hidden features of StockCharts. I've been using the StockCharts platform for a number of years, but really in the last couple of years when I joined StockCharts as their chief market strategist, joined the company full-time, I've enjoyed so much getting to know a lot more about the platform, a lot of the bells and whistles, a lot of the tricks on how to use the platform more effectively. And to be honest with you, I've learned a lot in a couple ways. One is by just trying things. I always encourage people, if they're learning on any new platform, and StockCharts is no different, the way you really learn it and make it your own is by trying to answer questions using the platform, right? What stocks are doing well? What stocks are breaking out? What are the major averages doing? What does the dollar look like? Those kind of simple questions will force you to learn the platform and understand how to bring up different symbols and how to analyze them effectively, how to set up your charts in particular ways so that you can go back to them and draw some effective conclusions over time. So my first suggestion is to just get your hands dirty and get in there and just try to answer questions using the platform. The second thing is to watch those that use it effectively. They use it very, very well. The power users. We have a lot of power users on our StockCharts platform, and the really cool thing about StockCharts is we have a whole set of commentators that are part of the StockCharts family and are sharing a lot of charts every day. A couple ways you can see that on StockCharts TV. You'll basically see an endless 24-hour stream of people using our charting platform pretty effectively. Also, our articles page on StockCharts is a way to to read examples of market analysis using StockCharts, and it's pretty easy to try to replicate some of the charts that you see there. The third suggestion I would give you is to ask questions. And I was able to ask people like Tom Bowley and Arthur Hill and Chip Anderson and Grayson Rose and Gaddis Rose and others that have used StockCharts for years and do it so well. I was able to ask them questions on different things I was trying to do. The good thing is we have a number of mechanisms built into StockCharts for you to ask questions. Our support desk is a really good place to go because they can be pointing you in the right direction. The Final Bar of this show, we have a mailbag twice a week, and I'd be happy to answer questions that way as well. So email me questions at thefinalbar@stockcharts.com. That was quite an intro to get into this third item, which is the historical chart gallery. You know, as an institutional investor, we spend so much of our time talking about market history, and it's interesting to me that working more and more now with individual investors, I see less discussion about market history, more discussion about what's coming next, what's happening, the next big thing, which is fine. That's a lot of what investing is trying to be where the market is going to, or think about where the market's going to be, or where expectations are going to evolve in the coming years. But it's also about understanding the lessons of market history. While everything could be new, right? And while cryptocurrencies are a new asset and the way ETFs have evolved and the market structure has evolved, all that's totally new. Human nature is pretty constant, right? We still get nervous and excited and desperate and panicked and optimistic and pessimistic. And those things are reflected in asset prices. So we can gain a lot by looking at historical periods. Even though the particular bubble which we may be experiencing now may be new and different, the idea of bubbles, it follows a pretty consistent pattern. And you can actually look at historical bubble phases and see what's actually gone on. The way you get to our historical chart gallery, by the way, is in the upper left corner of our platform. There's a link that says Charts and Tools. This is a really good place to sort of familiarize yourself with all the different features. And as we go down here on the right, you will see Historical Chart Gallery. Now, this is a really cool part of the website, and I wish we use it more. I try to do my best to bring it on my show and bring into some of the articles I'm writing. I wish I did more of it, because this is just a great history lesson, a fantastic history lesson on what you're on what you can learn from market history. As you'll see from the message at the top, you can access these these charts in a large format. They're static images representing that market history. If you're a pro level subscriber to StockCharts, you can actually create your own live versions of these charts and save them to your own chart list. But there's so much history in there. We limit it to the pro service level. So if you're doing this sort of analysis in depth, I would encourage you to upgrade your service if you're interested. I'm going to highlight a couple of these, but I will just show you that there are a bunch of really interesting things on here. We're going to start with under important market indexes. I'm just going to highlight a couple. Start with the Dow. You know, in the Fidelity chart room where I used to spend a good amount of my time when I was at Fidelity, we had a really beautiful wall-sized chart that looked kind of like this. It was the Dow going back, for 100+ years, and it was just a beautiful illustration of market history. One of my favorite parts of this chart is right in the middle. Now, this is the 1940s, 50s, 60s, sort of the post-World War II era into the late 1960s, and this was called the go-go era, the go-go years on Wall Street in the 1960s. From there, we have the secular bear market of the 1970s. Now, what's interesting about this is that this is the Dow Jones Industrial Average. It first reached 1,000 in 1966. You can see that here. You can see a number of times where the Dow tried to get above 1,000 and failed. And look at this beautiful basing pattern where you keep hitting resistance and you keep pulling back. But then finally, after the 1982 low in 1983, we break above 1,000. Don't look back. We continue to push onward and ever upward, as I mentioned a lot of times on my show, pushing up into the right, really accelerating into the tech bubble in the late 90s. What's helpful about this is it's just a great reminder of during a traditional secular bear market, they can last for quite some time, right? So, you first reached this peak in 1966. It took us, until 1982, 1983, until we finally made a new all-time high yet again. So it's a reminder that when people talk about the market pulling back and think, well, that's probably it for the bear market, I have to remind them that bear markets can actually last quite a long time. If you look at the 1970s on the Dow chart, that's a great idea. This is what the 2000s looked like on the Dow chart. The S&P chart, a couple of charts down, gives it a little better because it had a similar pattern where you first reached the all-time high in 2000, reached almost the same level in 2007 and pulled back, and it took all the way till 2013 when the S&P made new highs. So from about a 13-year gap between first reaching that peak in 2000 and then finally eclipsing it in 2013. So these charts are just great illustrations of how long bull and bear cycles can last. On the other side, you can look at these bull market cycles, and when you see how far the market has gone and it feels like it's overextended on a time basis, bull markets can last a lot longer than that. If you think about 1983 to 2000, that's about a 17-year bull run from making new highs to actually reaching the peak. So if you think about 2013 as when we made a new peak, you add 17 to that, that puts you out to 2030 to have a similar bull market to what you saw in the 1980s and 90s, added to what we saw in the breakout in 2013, suggests that we're actually still in the early days potentially of that run. But what you also have to remember is during that bull run, you had things like the pullback here in 1983. You had what else? The crash in 1987. We had the 1990s. We had the Asian currency crisis. We had all sorts of things that occurred all along this way. It was not just a straight line from 1983 to 2000, but it sort of takes a step back and allows us to have a much of a respect for the longer term trend. And just remember that equities in general are going lower left to upper right on any chart you bring up. And over the long term, they've been an incredible generator of wealth. I want to fast forward a little bit. We'll go back commodities to the dollar. I like looking at the long-term dollar index just to think about the relationship between stocks and currencies. Now, I was taught early on that strong dollar means strong stocks, particularly strong U.S. stocks. And because dollar strengthening, people are going to the safety of the U.S. markets and the U.S. dollar, the stability of the U.S. dollar, and so that's going to be good for asset prices in the U.S. But if you look at this relationship, you can see it's not a very strong correlation, right? If you think about where this is in 2000 here. This is 2008. So that whole run from 2000 to 2008, the dollar was actually declining. Now, this is when you had the S&P going down to 2002, going back up to 2007, and back down to 2009. During pretty much that entire time, the dollar was weakening. You can see the U.S. markets, pretty much rallied from 2009 to 2013, making new highs, and the dollar was essentially stagnant during that period. So while we can think about relationships like that, what does the dollar mean for stocks? You have to remember you're making a broad generalization. When I like this chart reminds me is that it's never a one-to-one relationship. We love to come up with these simple relationships. What does the dollar do when stocks are strong? Or what do stocks do when the dollar is strong is really the way to think about that. And in reality, you can come up with generalizations. So I like to think of these in terms not of absolutes. Stocks should go up because of the dollar strengthening, and think of it more in headwinds and tailwinds. Stronger dollar should be a tailwind for U.S. stocks, especially versus non-U.S. stocks. Should be a tailwind for small caps over large caps because of their non-U.S. exposure with multinational corporations. Those are the sorts of conclusions I would want to draw from a chart like this. Not absolute relationships, but more generalizations, more headwinds and tailwinds. Finally, on this page, I want to look at the long bond yield, and this is the 30-year Treasury yield, $TYX, and it's going back to World War II essentially. If you see in the charts behind me, I have 4 paper charts in my office. The one here is very similar to the chart you're seeing on your screen. It's the looking at interest rates over the long period of time. It's going back to early 20th century, and so the point of this is just to show the incredible rise in interest rates from World War II to a peak in the early 1980s, and from there, essentially, that yields have gone down. What I love about a chart of this time frame is we talked so much recently about rates going higher and how, you know, a rising rate environment and how high could interest rates go because they've come up so much. That all of that we just said is this little blip on the far right side of this huge downtrend. So when the question is how high could rates go, I have this chart in the back of my mind, and my answer is a lot higher. Now, do I think 10-year yield or 30-year yields would go up to where they were in the 1980s? Not quickly, and certainly unlikely. I don't think that necessarily be what we see, although it's possible. But it's just a reminder that we're thinking of different orders of magnitude. If you just look at a 1-year chart, you will think something's overextended just because it's at the top of the range over the last year. These longer term charts help you build out that history a little bit more and think about the big picture in a little more reasonable timeframes. Now, those charts that I showed you were just in this first section on important market indexes. The other cool charts we have here is looking at long-term history of earnings on the S&P valuation ratio, so looking at PEs. So, you know, it's worth noting, I was taught that stocks follow earnings, price follows earnings. And I think the charts here sort of tell that story, particularly over the long term. You know, I've often found that technical analysis is really helpful for understanding the short to medium term timeframes. For longer term timeframes, it's really more about the economic conditions, the fundamental conditions, the business cycle. That's what drives asset prices over the long term. So we would always say that, you know, in the short term, the technicals will lead the fundamentals, but over time, stocks will trade to their fundamental values, theoretically. Benjamin Graham famously said, in the short term, the market's a voting machine, and the long term, the market's a weighing machine. This chart, looking at the relationship between the value of the S&P 500 and the earnings of the S&P companies, shows you that general relationship between the markets appreciating because companies are earning more, right? They're growing earnings over time. The other 2 pieces on here are market breadth indicators with some good deep history, thinking about market breadth conditions during previous bull and bear cycles, and the presidential cycle, showing you how the markets have traded over different 4-year periods. Really interesting right now as we get to the midterm elections and thinking about what a midterm election year traditionally looks like. So all of those charts are available to all of our users on the historical chart gallery. You go to Charts and Tools, select historical chart gallery from the right. You can see all of these long-term charts. And again, I think there's great value. These charts don't change often, and they shouldn't. The lesson is not in seeing what's happening right now. You're probably doing that already using stock charts. What you want to do now is look at the longer-term history and understand how what we're seeing right now can be similar in a lot of ways to some of the previous market cycles that we've experienced. I hope this was a helpful look at some of the historical charts. I'd encourage you to dig in a little further. And again, if you want to create your own charts with this sort of deep time frame, our pro level users are able to do that and create their own chart list. So consider that if this is an area you want to focus on. For StockCharts.com, I'm Dave Keller. Thanks for watching the final bar today. Stay safe, be well. Talk to you again soon.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.